All right, good morning, everybody. Hopefully, everyone is doing well. Welcome to another live stream here on Facebook. My name is Patrick France, senior instructor here at VectorVest. Glad to be with you all today. Hopefully, everyone is doing well, having a great day so far. If you're new here, welcome. Glad to have you all. If you're somebody who's been here for a while, a VV High Flyer, make sure to type in hashtag VV High Flyers in the comments section. Let me know if you guys are one of our loyal Facebook livers here. Before we get started, I just want to make sure everybody can hear me. So if the sound is coming through fine, if the video is looking good for you, just let me know in the comments as well. Let me make sure that's sounding good. And then once we have confirmation of that, we'll go ahead and get started. So I see a few people already chiming in. Good morning, Nirov, Edwin, Jay. Hey, Wedgman, that's right. So today we've got more of a technical session here today. Today we're going to be focusing on utilizing moving averages and how you can benefit from them, how you can utilize them in your own personal trading to make money here. So, if you're looking for some help on how to, time stocks a little bit better, find more concise entries and exits, help remove your emotions out of your investing, then you're at the right spot. Today is going to be a session that's going to be perfect for you. Awesome. Paul's tuning in from Akron. Hopefully you're doing well there, Paul. Sounds good. Sounds good. Awesome. Thank you, everybody. Good morning. Hopefully you all are doing well. Glad to have everybody here. Yeah, Mark, I did. I did it at last, finally. All right. So for anybody new, what we're going to do is we're going to start off taking a look at what's going on in the mobile app today. Then we'll jump into our topic. I'll show you how you can build your own moving averages, how you can customize it, all of that here. And then as always, we like to save the fan favorite towards the very end where we'll show you how to analyze any stock that you want to take a look at in less than 20 seconds. So with that, I do have a link in the description section of the video that if you are not a subscriber already, you can download it, give it a go, and try it out. I am going to be using the premium version because we do offer 3 different versions of the app. So just before we even get started, I want to make sure I'm clear on that I will be using the premium version here today. If you're not on the premium version or it looks different, give our support a call. They'd be glad to help you out. All right, so got that in. Let's go ahead and start to take a look at what's going on here today. So as we can see right now, we are 3 ticks into the yellow. The market is neutral, and VectorVest does not advocate buying any stocks at this time. As always, if you're already a subscriber, watch these daily color guard reports and weekly special presentations on Friday because these will help you know what's going on in the market, prepare you for any major turnarounds or changes in the market, and make sure you stay on top of things. So, it's highly recommended to watch those videos on a nightly basis. Then as we scroll down, we take a look at the color guard. So as we can see, we have the 3 yellow lights across the board. Price is lower day over day and week over week. RT barely above 1 now. We've been staying above 1 for quite some time. Now we're just barely above 1. So we do have some worry here coming into the market, which should be no surprise. We've been talking about it the last few weeks. Everything that we see here, we should all be familiar with and comfortable with and already planning for any changes coming up. So as we look at the buy to sell ratio, we've gone from 2.4 as of last week, all the way down to 1.6 as of today. So we've definitely seen a significant drop there. The market's been rallying, the market's been moving higher over the last, 3 to 6 months or so. But over that rally, we've definitely seen the underlying health of the market starting to deteriorate, and the buy to sell ratio really just confirms that here today. Then we look at the MTI, finally below that level of 1.6. So it's starting to come down a little bit, still up in the stratosphere, but coming down nonetheless. And then we look at the trend. We are in a down up situation. Right now, the weekly trend of the market is down since we're lower than we were last week. But the underlying trend of the MTI is still above 1. So underlying trend still remains up. And then for our most conservative investors, we still remain in a confirmed up situation. So as we scroll down here, we take a look at the advanced declines. Right now, we're sitting about 30% of stocks moving higher today and about 57% of stocks moving lower. So close to that 2-to-1 declines to advances ratio. Obviously not the time right now, but if we see the decliners start to pick up later throughout the session, could definitely be an opportunity to pick up, a hedge or some way of protecting ourselves from the downside risk here. So we scroll down. Dow is essentially flat. Nasdaq's taken off higher here, up about 0.5% for the day. S&P's basically flat. VectorVest Composite down about 0.1% so far. Well, Daddy, how helpful and accurate is VectorVest for day trader? Extremely. Ask anybody here about our Jockey Club members. That's going to be our more day trader room. We do live trading there. We've been extremely successful with that. So if you're interested in that, give our support a call, or maybe somebody that's in here that's from the Jockey Club could comment on that. Let them know your own success. New to the game, finding the right entry point is difficult for me. Well, Raf, you're in the right spot. Today's going to be perfect for anybody just getting started in the market, or even people who have been in the market for a while that just struggle on knowing, when they should get into a stock or when they should get out. Now, before we take a look at today's topic, I always want to make sure that we always cover this. Market timing that we can see right here at the top of the mobile app dictates or trumps any individual rating on a stock. So always check the market timing to make sure it's either a good time to buy or not a good time to buy. If it is a good time to buy, then that's where we start to use what we're going to be talking about here today. Same could happen for contra ETFs. If you're worried about, the market pulling back, you want to hedge some of your positions. Using these types of moving averages or using moving averages in general can help you navigate contra ETFs a little bit more effectively and help you give more precise entries and exits there. So with that, before we get started, if you haven't already hit that like button, make sure to do so. Make sure to share this with all your friends, all your family. Let's keep getting everybody in the room here today. So if you haven't already hit that share button, you haven't already given this video a like, make sure to do so now. So that way we can continue to grow our community, because a lot of your feedback that you guys give me on a week-to-week basis goes into our planning and decision processes of what to add to the app or what to really improve on, or just how to make it better just in general. So continue to grow the room. I appreciate everybody's support. So let's get on to it here today. All right. So first things first, getting into graphs. Now, if you're just looking for a specific stock, you can always go to that little magnifying glass in the upper right, which we'll highlight in a little bit. Today, we're going to take a look at the watch list that we built from last week. So we go to the watch list, open it up. As you can see, here's our top performing stocks that we had from last week. And we'll start off with Enphase. Go ahead, pull up the graph. As you can see at the bottom, I'm on a 3-month time frame. I have volume there. We can change that, but to customize anything on the graph, all you have to do is go to the graph settings at the bottom. And this is where you can change your time frame, your frequency, your chart type, all of that. So today we're going to start off by going to the moving averages section. And as you can see, you always have the ability to choose up to 3 moving averages at a time on any graph here. So today we're going to be focusing on 2. Obviously, there are more advanced techniques that you can use that require 3 moving averages, but to keep it simple for everybody, and especially if you're brand new getting into the market, we'll focus on just 2 here today. So first things first, we'll just turn them on. There we go. And now, as you can see, you can choose simple, exponential, or weighted. Today, we're going to start off for short term, and then we'll start moving our way towards longer term trading. So we'll keep it on exponential. Now, if you're not familiar with the 3 different types of moving averages, head over to Investopedia. They'd be glad to help you out. Essentially, simple is just a basic moving average. Exponential puts more weight on the current time frame, and weighted, puts more evenly distributes the moving average, or the averages there. So what we're going to do is we're going to start off going into the 3, which is great for a short-term trader. So swing traders, day traders, momentum traders, all of those types of investors, those are going to be your main users of 3 and 8 exponential moving averages. So once we have that, we just go ahead and say back. As you can see, we could also add envelopes, support resistance. Our lower graph, you can see we have volume currently on there. We could change it to earnings per share, MACD, RSI, DPO. We're going to keep it on volume just to keep it simple for today. And so we'll go back now that we have that 3-month graph set up. And I'll just go ahead and zoom out a little bit here. All right, so as you can see, hold on, it has it still set for 20 and 50. It didn't save it. Let's go ahead and resave those back in here. I forgot to hit enter, that's why. Return. That is one caveat here, is if you're putting your numbers in, make sure to hit the return or the enter key on your keyboard or your keyboard on your phone to make sure that they do get set in there. Okay, so as we can see, we've got the 3 and the 8 now, and it gives us a lot of opportunities to make money. This is over the last 6 months because we're focused on more of a short-term trader, momentum trader here. So, for example, we had the pullback from February to March, got an entry point right around the 24th of March. VectorVest was also giving us a lot of green lights telling us it's okay to buy, giving us some opportunities to jump on board with that. So we saw that here. It pulled back a little bit based off some candlestick patterns. It never really got followed through once the 3 and the 8 broke down. Continued to stay above that point all the way from, where was that buy point actually? Let's go, the closing price of that day, 30.84. Closed here at 60.84. So you've gained $30 a share in 2 months' time. I would definitely take that. You basically made 100% profit in 2 months' time. Then it got you out as the stock went from $60 a share all the way, where does the next buy opportunity? At 46. So you saved $15 a share. So about 25% roughly, if I'm doing the math right. You saved yourself a 25% pullback there. Well, then you got another opportunity to buy at 46. And now you've been in a buy mode all the way to 73. So what this is doing from a simplistic standpoint is when the 3 crosses above the 8, or the shorter term moving average crosses above the longer term moving average, that tells you that short term momentum is favor of the upside. That tells you that there's a buy opportunity. That gives you a clear, concise entry. There's no guessing on that. There's no, should I buy right now? Should I not buy right now? This tells you yes or no. It's a very, black and white situation here. Now, when the 3 crosses below the 8, that tells us that short-term momentum is starting to wane, that we may be changing direction in the stock, as we saw here, back around the middle of May. And that can tell you, hey, momentum is changing. Right now would probably be a good time to take my profit off the table. Not only can moving averages help you get in, they can also tell you when to get out, or when to protect your profits, or when to simply move to the sidelines because something's not right in the situation. So for shorter term investors, they're a great way to give a more concise or more disciplined entry and a more disciplined exit. Because that's, being an instructor here for well over 9 years, that is one common theme I notice with new investors, is that they have a hard time. They either hold on to stocks too long after they've been on a big run, or they get into a stock that's still continuing to fall and has no sign of an uptrend starting to form, or they try to find stocks that are really beaten down. They jump on board, but then they have no exit strategy of when they're getting out. Moving averages can help you clearly define a trading plan for yourself of when to buy and when to sell a particular equity or stock. So, as we can see, ENPH made some pretty good money over the last 6 months utilizing the 3 and the 8. Let's go ahead and take a look at another one here, Advanced Micro. Now, when a stock is moving sideways, that's when utilizing moving averages can really, give your portfolio some whipsaws here, because you can change every other day. So it's nice to combine them with, some other type of analysis, or when you see a stock that's just trailing sideways, move on to the next one. Not every stock is going to be the best stock to trade at any given time. But as we can see, Back around the middle or end of March, we started seeing the 3 and the 8 turning back around after it's been in a steady decline there. You saw that final point to buy around 44. You got a short-term little run up, and the 3 crossed below the 8 at 54. Okay, so $10 a share. That's 25% roughly off of $40 share. Then the stock moved sideways for a while, and then all of a sudden, maybe you didn't buy in here because it was still moving sideways. But then you saw it break above these highs here, and the 3 was a positive above the 8. You bought at 57. Well, now it's trading at 81. Would that have been a decent gain there for you? I mean, from a short-term trader's perspective, that's definitely a good day's work right there. And this is why, keeping an eye on the moving averages is extremely useful. As we continue to scroll through here, though, you can see now the stock's kind of moving sideways. The 3 and the 8 moving averages are moving sideways, telling us that we may be in some indecision right now. If you haven't already taken your profit, keep an eye on that. Could give you a nice exit signal to take that profit off the table any day now. But get you out too quickly for long-term investors. Ashok, yeah, we're definitely going to be talking about long-term investors here in a little bit. One of the other, so I see a lot of people talking about the 3 and the 8, all of that. If we want to take a look at another one for, let's say, more momentum traders or swing traders, 3 and the 8 definitely work, but they're more aggressive. If you want to be more prudent in nature, we can go to the customization, go back to the moving averages. We'll keep it on exponential, but you use we'll go simple. We'll just use one of them. Take off both of them, or just take off one of them, add another to 20, hit return so that way it sticks in there. And this is another way you can utilize it. Just simply focusing on one moving average rather than two. So we've gone from 2 moving averages, a shorter term and a longer term, to now just 1 moving average. The way you would utilize something like a 20-day moving average, this is very common, or it's one of our other instructors here named Glenn Tompkins. He talks about this a lot. He really likes the 20-day moving average as a swing trade opportunity, because what he's looking for is when the price action crosses above that 20-day moving average, that's your buy period. And when it crosses below, that's your sell period. So once again, you see that opportunity right through here around April to May. Got you out, stock was moving sideways. You can look at that moving average and tell the stock was moving sideways because the moving average was flat. But then all of a sudden, you got another opportunity when it broke out here at 57 and still staying into it, maybe getting ready to protect your profit. So this is another opportunity for swing traders or somebody who's looking just to ride the wave, if you will. Nvidia, looking at it on a 20-day moving average. You saw, let's go zoom back out a little bit. You saw the disruption all stocks pretty much had throughout February and March. Then all of a sudden, you got a bounce up and it closed. Let's zoom in back now that we see that. So that staying or following the 20-day moving average kept you out of that sell-off. But then all of a sudden here, it crossed above and closed at 250, let's call that. Well, since that point, it stayed above that 20-day moving average the whole entire time and is now trading at 486. So as you can see, this is a great way to help you get a clear, concise entry when it broke back above that 20-day moving average and keeping you in it for as long as it's moving higher. Because right now we're still sitting at 486. It's still well above that 20-day moving average. It's still saying, hey, hold on to this for right now. So if we go take a look at the next one, here's Etsy. You had the sell-off in March, no surprise. Had a little bit of hesitation here. Maybe you got in, maybe you didn't. But then all of a sudden, you started seeing it break above here on the 6th of April. This is when VectorVest was, telling people to start trickling themselves back into the market, even a few days before that. So you could have used that as an opportunity there at 41. pulled back, touched it a few times, nothing ever really closed below. Let's say you got out here though. Okay, so that's trading at 100. You made $60 a share when you paid $40 a share. You made over 100% on this trade just by using that. Not a bad day's trade there, folks. If you like getting, big digit gains and having a systematic approach, using moving averages is a perfect solution for you. And then once again, you could have even used it here. You got in at 107. Now it's trading at 130 and you're still above that point. This is still a great way to time it. Now, if you're already in, let's say you did get in at the 107 point, when it breaks below that 30 or 20-day moving average, that tells you, hey, just go ahead and sell it. No questions to be asked, no analysis you really need to do. You don't need to spend hours upon hours just going over every single different indicator, looking at 5 different indicators to see if they confirm it. Just something simple, easy, effective, and it helps save yourself a lot of time and a lot of headache and a lot of worry all at once. So moving averages are a great way to really enhance your trading and help you become more successful, and not only capturing these big winners, but they can also help you mitigate some loss. As we saw here, let's say you did try getting in as the market was rolling over. You went against the guidance that VectorVest was saying of getting out of the market. You tried anyways. So you got in at 55, sold it here at, where does it close? 50. So you lost $5 a share. That's about 10% that day. Hey, better getting out at 55 than letting it go all the way down here to 33 and getting out. So not only can moving averages help you identify when new uptrends are starting to form and help you identify when to get out of that uptrend, but they can also, if you do get whipsawed, they can also help minimize any loss that happens in the portfolio rather than letting a small loss turn into a big loss and really hurting the overall portfolio as a whole. So those are 2 different ways for, shorter term traders to be able to, identify some easy entry and exits without having to really get into a whole lot of, in-depth fundamental analysis and spending hours upon hours trying to do things. Fahad's asking, which moving averages is good for options? Fahad, it really depends on which options you're trying to trade. If you're trying to do weekly options, you probably want to use some very short-term option or short-term moving averages. So it really depends on what kind of options you're trying to trade. Mark is asking, does taking profits mean close out of the stock? So Mark, taking profits means either closing out completely or selling the amount of shares that equates to the total profit that you have, and then essentially using that as a restart on the stock, like you're just getting into it for the first time. But realistically, if you're using the moving averages, when it crosses below, that's a good time just to simply get out, because it could stay below those moving averages for quite some time, and you don't want to, be left taking your profit on one and letting your initial position go down and wipe away all that profit you just worked hard to get. So, you could use either or, depends, but the way we're talking about it here today is just simply closing the stock out, taking your profit, moving on, finding another stock, finding something new to add to the portfolio rather than keep using the same stock over and over again. All right. So, any questions on, these shorter term trades that we've been looking at here, these swing trades that we've been looking at here? If you do, let me know in the comments. While we're getting ready to take a look or change our focus from short-term traders to long-term traders, I'm just going to put out a poll. For anybody who does already use moving averages, go ahead, answer the poll if you want. I want to know what moving averages you guys use. So I made that live. Go ahead, answer that. Let me know, what you guys find most effective. On that note, let's go ahead and start to shift gears a little bit. We're going to take a look at more of longer term investing. These are going to be the tips and rules you want to use for your nest egg, not going to be the ones that you use for, your play money, if you will. So as we can see, we already have that 20-day simple moving average. We're going to go to the graph settings, go back to the moving averages selection, and then one of the most commonly used, we'll go ahead and just start off with it. The 50-day moving average, and then the 200-day moving average. Both of them are simple. Now we've got those on. Let's go ahead and zoom out. So starting off with Etsy. Go ahead, zoom that in. Here's our day that we got the breakout, or the 50-day moving average, the blue line crossed above the 200-day moving average. So you saw that at, where's the close? 78. Now it's trading at 131, still in it. Let's go take a look at the next one. Salesforce, big name. You can see you had some opportunity here for a longer term investing, or for a longer term entry going into the beginning of the year at about $160. Finally, when the 3 crossed below the 8, you were sitting at $150. So $10 a share, you tried, didn't work out. Most likely, you probably would have gotten out just based on the overall market guidance that VectorVest was giving at that point. But if not, if you're following your trading plan or your rules to a T, you got out here $150. Okay, so we lost a few bucks on that one. On a $160 stock, losing $10 a share, not a big percentage move. That's okay. We can withstand that. We can keep fighting another day with that minimal loss. Well, now all of a sudden we get in here at 174. We'll call that 175. Now it's trading at 205. So all of a sudden we've now gained $30 a share. We lost $10 a share the first time we tried, but now we gained $30 a share. So we are definitely ahead on this trade, still in it, holding it for as long as we get the opportunity for it. Let's go take a look at the next one. So NXST. Let me go ahead, just refresh this. So NXST, let's go ahead and analyze this one. Same situation. You got an opportunity here at around 118. So this one got hit pretty bad if you really held on to it, which I really don't know anybody that's in here that would hold on to it, especially if you're somebody that's been here for a while. That we were we were sounding the alarms, telling people to exit their positions, telling people that we're entering into a bear market, all of that. That's what VectorVest has done consistently for well over 30 years. It's why we're a company. It's why we've been around. If you really held on, yeah, you took a pretty big loss on that one, but you're still out of it. So rather get out at some point. You have to have a plan to at least exit or to know when to exit your criteria or when to exit a stock. Shopify. This has been one that everybody asked about for quite some time. Let's see. Zoom in. Let's go. So this one stayed a buy even through that rough patch. This one stayed a buy the whole entire time. But these are stocks that we've been, pre-selected. Let's go ahead to the pick section. Head into safest stocks. We've already looked at Salesforce, so we'll go take a look at this one. Oh. And these are going to be the types of stocks that you want to use a 50 and 200 on. These are going to be your longer term holdings. So here, you had a brief period right after April where we just crossed below that 200 day, but then got back in at, this one's an expensive stock. 667, and now it's trading at 831. Before that, you were in it pretty much the whole entire year. Let's go take a look at the next one. ALGN, definitely been a wild ride, but you can see where this can be extremely useful here. So here, saved you from that. Here you got in at, let's see, 273. Where'd it get you out at? 137. So Not the greatest rule on that one, but once again, you're sitting through a period where the market dropped 30% on average. Most people weren't going to be sitting there holding their stocks through that time frame. Now all of a sudden you're at 250 or 266, trading at 300. So not bad. Adobe got you an entry here at, what is that, 302. You're still into it at 466. Even through that pullback, didn't have enough of an influence to drop that 50-day moving average below the 200. So you're still in hold mode. Once again, don't really know too many people that would sit and hold through that, but at the same time, moving averages weren't giving us any warning signs on that point, so not a bad look there. All right, so let's see. 5, 10, and 20. I used the 3 and the 8 for short term and 21 and 50 for long term. That's not a bad combination. Let's go take a look at those. Mike's saying he uses a 40-day. Yeah, a lot of people, the default in the VectorVest software is a 40-day moving average. Industry standard is typically going to be around a 50-day moving average. That's what you always hear people talk about. We feel a 40-day actually, for new people getting started is a good place to start. It's a little bit faster than that 50 days, so it'll get you in a little bit before and get you out a little bit before as well, for everybody looking at the 50 and 200-day moving averages, the 50-day moving average. And it's generally just a good place to start. Now, you can customize moving averages to fit stocks a little bit better. If a stock is really volatile, maybe you want to smooth that out a little bit. So you may make the moving averages bigger periods to help smooth that direction or price direction out and help ease some of that volatility so you're not getting whipsawed. Or you could make them tighter if you wanted to get, quicker entries and exits. If you wanted to trade one stock just in and out, you could tighten them up as well and use that for very short-term trading. All of those are definitely possibilities that you can use here with the moving averages. So once again, let's go see 21 and 50. So we've already got the 50. Let's just go ahead and change the bottom one here. There we go. All right, so here's the 21 and 50. Now the lines are switched this time, as you can see in the upper right-hand corner. As we can see, the 50-day moving average is the blue one now. The purple one is the 21-day moving average. So, yeah, this is looking pretty good for Adobe. You got a great entry here at 297. Sold out at 315, so you still made a profit even with that pullback there. And then got back in around 350 and still in it at 466. So, yeah, I'm liking the look here, Ashok, of the 2150. Lulu, let's take a look. Buy here at, where did that close at? 190, let's call it. Sold here at 218, let's say 200. So $10 a share, survived it through, instead of selling out at 140. Then buy back here at 232, trading at 363 now. Not a bad look. I really like the way this looks, Ashok. The 21 and 50, yeah, look like some pretty solid moving averages. Trex opportunity, or the buy came in right around, let's see where that was. Actually, let's just rotate it here. It makes it easier. 109, now trading at 150. Yeah. So as you can see, these are some great ideas, some great trading candidates that you guys can take advantage of that not only have good fundamentals, but, help smooth out some of those moving averages there, help make it easier for you guys. So if you guys have used moving averages in the past, or if you liked moving averages or just starting to learn about using moving averages, don't forget to hit that like button, share it with your friends, share it with your family, because especially if you're new to investing and not familiar with how to use moving averages, If you're one of those people, I'm sure there's a lot more of your friends out there that also don't know how to use them. So it's extremely important to help your friends become successful in investing by learning the tricks of the trade, if you will. So don't forget to share this video with all your friends and family, because all of that, not only helps me out by continuing to grow the group, but also helps them out to become financially independent. And that's really our goal here week in and week out. And that's why we do these live sessions, or why I do these live sessions every single Thursday here with you guys. All right. So with that, let's go ahead and start to shift focus here. Let's go ahead and start to analyze your guys' stocks. So if you have stocks that you want to take a look at, put them in the comment section. Hit that like button as well while you're putting them in the comment section. Let me know. I'll start putting them in and showing you guys how you can analyze them in less than 20 seconds here. If you're not already on the mobile app, once again, there's a link in the description of this video. You can click on, download it, get started right away. If you're already a subscriber utilizing the mobile app, you want to do this, what we're going to be covering here, just pull up your phone or your tablet, whatever you're using, and you can do the same thing we're going to be doing here today from wherever you're at any given time. All right, so let's see those stocks coming in. All right, there we go. Okay, FSLY is going to be the first one. So to analyze, if you're wanting to do a quick lookup of a stock, tap on the magnifying glass in the upper right, FSLY. And we're going to take our time with this one and work our way through it here together. And then we'll start to speed it up a little bit. So we always start off with the 4 key indicators on individual stocks. So all of them are going to be cast on scales of 0 to 2. Above 1 is favorable, below 1 is unfavorable. The first one we come to is the RV, or relative value. This is looking at the potential of the stock compared to a AAA corporate bond over the next 1 to 3 years. Below 1 tells us we expect to see a AAA corporate bond outperform this stock over the next 1 to 3 years. The next indicator is the RS, and this is the consistency and the predictability of their financial performance, or, a simple way of looking at it. It's an indicator of risk. Below 1 tells us there is more risk associated with it. Above 1 tells us there is less risk associated with it. So as we can see, definitely has some risk here. Because the RV and RS are below 1, that tells us that this isn't a speculative stock. We're speculating on what's going to happen with it. So then we come down to the timing. 1.42, the timing is looking at the short-term price trend. So above 1, closer to 2 it is, the stronger the uptrend. Below 1, the closer to 0 it is, the stronger the downtrend. At 1.42, 1.43 as it just turned now, it's definitely in a nice steady uptrend. And because of that uptrend, if you're a speculative investor, yeah, you may take a risk on this one, because overall the stock is favorable currently, not by much, but still favorable nonetheless. But if you're not a speculator, this is one you definitely want to be careful with. All right. REGN. So REGN, great long-term potential, less risk associated with this stock. Unfortunately, though, even the strong fundamentals are not holding it up. It is in a steady decline. So the stock is favorable from the fundamentals, but it's in a decline. So right now we'd be staying away from it. Need to wait for a better opportunity with that. BNGO. You have, let's see here, a speculative stock, penny stock. It's 68 cents a share, less than $1 here. You have poor long-term potential. You have a lot of risk associated with it. Timing is essentially flat, therefore it's not favorable. All right, let's see the next one, VIPS. So there we go. VIPS, great long-term potential, solid fundamentals. Timing is not there, so good stock. Just wait for a better opportunity to be buying it. EB, poor long-term potential, a lot of risk associated with this stock. It's in a steady decline, therefore the stock is not favorable right now. UMP. There we go. UMP, poor long-term potential, but decent fundamentals, consistent fundamentals, steady uptrend. Overall, the stock's favorable. Baidu, BIDU. There we go. Poor long-term potential, a lot of risk associated with it. It isn't an uptrend, but I'd be careful with that one. Because with the speculative stock, you really want to see a strong RT. So by strong RT, 1.3, 1.4 or higher. That uptrend is enough to offset the poor fundamentals, but basically the stock's average right now. It's the best way to describe that there. INPX. There we go. Oh. There we go. So INPX. Poor long-term potential. A lot of risk associated with it. It's in a free fall. Overall, the stock is something to stay away from. Let's see what else we got coming in here today. Apps. Of course, apps is going to be brought up. I don't know why I didn't just start off with that one there. All right, so apps, great long-term potential, solid fundamentals, really strong uptrend. Overall, the stock is definitely favorable right now. NCLH, Norwegian Cruise. So, no surprise here. Poor long-term potential, a lot of risk associated with it. It's in a steady free fall. Overall, the stock is definitely not favorable. FDX, poor long-term potential. A little bit more risk than average associated with it. But you do have a really strong uptrend right now, so the stock is favorable. Let's see. HMY. And also, if you're a long-term member here to our Facebook sessions, don't forget, I want to see as many hashtag VV high flyers in the comment section. Let's get that trending here today. Let's see if we can do that. All right, so HMY, you have great long-term potential. You do have a little bit more risk associated with it. Really strong uptrend on a short-term basis. Therefore, the stock's definitely favorable right now. DG, great long-term potential, solid fundamentals, consistent, steady uptrend. Overall, the stock's favorable. Tesla, yeah, TSLA. There we go. Rosalind, I'm sure you're not going to be the only one asking for Tesla today, so we'll definitely knock it out here for you. All right, so looking at Tesla, you have decent long-term potential, solid fundamentals, really, really strong uptrend. So overall, the stock is definitely favorable here. Everybody loves some Tesla right now. Tesla is the Apple when Apple was back in early 2010, 2015, around that range. All right, let's see. BNGO. I think we analyzed this one. Yeah. BNGO, poor long-term potential, a lot of risk, basically flat, definitely not favorable right now. NVAX, NVAX. So good long-term potential, does have some additional risk associated with it though. Steady uptrend, so overall stock's favorable. GRWG. Let's see here. GRWG. Good long-term potential, but it does have a lot of risk associated with it. Really strong uptrend, even with it down so much today, probably because it took a huge jump yesterday. So therefore, stocks, favorable for a speculator, favorable for a aggressive trader, but not going to be one that you would be buying for a long-term hold, at least for the time being. ICLN. There we go. So ETFs. Now with ETFs, especially if you're new, one trick with ETFs, the RV and RS are two fundamental indicators. Well, ETFs don't report quarterly earnings. They don't have financial statements they release. So therefore, the fundamental analysis is not going to be done because you have no fundamental analysis to do. So therefore, the focus on ETFs is going to be the relative timing. You want to know if the ETF is in an uptrend or making you money, or if it's below one and in a downtrend or losing you money. So at 1.39, definitely in a nice steady uptrend. So therefore, this ETF is favorable right now. Let's see, LOGI. LOGI, great long-term potential, great fundamentals, nice steady uptrend. Overall, the stock is favorable. Let's see. Mike is asking, if VectorVest declares a bear market, do you sell your stock if it's over 50-day moving average? So, Mike, there's a few different things you could do with that. You could, we have a lot of videos here that I've done that I definitely recommend to go back on and take a look at, or especially on protecting profits. But the four basic things you could do are just ones that we could think of right off the top of our head are either, if you're not comfortable with it, sell your stock outright completely. If you're into options, you could buy a put as insurance. You could also just tighten up a stop or put like a trailing stop on it or something to make sure that you're tightening it up. So if it does start pulling back at all, you lock that profit in. I'm trying to think of any others, or you could sell a call option. We talked about that last weekend, and try to gain some premium off of that stock, but also help protect yourself, or give yourself a little cushion on holding a stock through a pullback like that. So those could be some opportunities or options that you have there. CSCO. So CSCO, good long-term potential, a little bit better than average fundamentals. You are in a steady decline, so therefore the stock's about average right now, but timing is just not there. Let's see. Give me a second, guys. Trying to clear some of this up a little bit. Guys, if you spam in the chat, I will delete the comments and block you from here. So I'm just giving you a warning. Not saying any names, but pretty sure people can figure it out. But if you spam in the chat, I will block you from our sessions. Just letting you know. I don't tolerate that. Don't want people trying to promote themselves. Today, we're all about learning. We want to help each other learn. Trying to sell something to everybody this is not the place for it. Just throwing that out there. All right. Let's see. EGS. Not seeing EGS, Mohammed. TME. So TME, great long-term potential, but it does have a lot of risk to get there. Timing is about flat, so you're definitely keeping a close eye on this one. Overall, the stock's favorable, but I'd really like to see timing pick up a little bit more there. Hey there, Sam. Nice gains in Tesla today. Yeah, definitely looks like it's moving pretty good there. Kirk, K-I-R-K. Poor long-term potential, a lot of risk. Really strong uptrend on a short-term basis. It's down a lot, down 5% today, but after that big run-up that we've seen, 5% is a very small move in comparison to what the move has been to the upside so far. So overall, stock's favorable for a speculator to trade. Not going to be a long-term buy and hold, though. All right. What was that? Work. WRK. Poor long-term potential. Does have a lot of risk associated with it. Timing is in a steady decline on a short-term basis. So therefore, the stock is not favorable. Form. So Form, you have good or great long-term potential, really solid fundamentals, nice steady uptrend. Overall, the stock's favorable. All right, let's see. Let's do a couple more real quick, and then we'll start to wind things down for the day. HMI. All right, HMI. HMI, you have great long-term potential. A little bit more risk associated with it, though. Timing is about flat. So you have a lot of volatility, but overall stock's about sideways. Stock's favorable overall, but I'd like to see that timing pick up a lot more. Plug PLUG. There we go. Plug. Poor long-term potential. A lot of risk associated with it. Speculative trade, but you have some really strong momentum behind it right now at 1.92. Therefore, the stock is favorable for your short-term aggressive speculators here. All right. WM. Poor long-term potential. A lot of risk associated with it. Stock is essentially sideways. Overall, the stock's not favorable. And we'll do one more for the day. Let's see. How do we access videos? That's a great question there, Tony. To access the videos, all you got to do is just go to the VectorVest Facebook page. So it's facebook.com/VectorVest7. When you're on our Facebook page, on the main page, there's a live section you can click on. And that will get you right to where you want to go. Or you can just type, actually, let's just do this. Let me post this. Give me 1 second here. There's the link in the chat there. You can also use that, and that'll take you to all of our archived live videos there. All right, so for the last one for the day, Chevron, oil and gas. Everybody's been talking about it. Let's analyze it. So, poor long-term potential. A lot of risk associated with it. Oil's been on a steady decline globally since 2016, I believe was 2015, 2016, around that time frame. So no surprise there that, it has poor long-term potential. Their fundamentals are shaky right now. They're in a steady decline. So overall, the stock is not favorable. I know oil on a short-term basis has been rising a little bit, but look at the bigger picture. It's definitely not in a strong uptrend. It's definitely not in a long-term uptrend as well. So, on that note, we take a look at the homepage. We're still 3 ticks into the yellow. The market is still neutral. We still don't advocate buying any stocks at this time. Looking at the color guard, buy to sell ratio is about flat. RT staying just right at that level of 1.01. MTI is dropping though. Price, I think it's picking up a little bit, but still lower week over week. Looking at our advances declines, advances still 32%, decliners 56%. So we haven't seen the decliners pick up enough to give us that 2-to-1 bias that we favor here. Looking at the major indices, NASDAQ up 0.6%. So NASDAQ's getting stronger. S&P's gaining just a little bit, really flat overall. VectorVest Composite gaining a little bit, but not much. So overall, pretty flat, boring day if you ask me. But, there's always some ways to take advantage of it. So on that note, I appreciate you all being here. Once again, if you haven't already hit that like button, if you haven't already hit the share button, do all that. All that helps me out. And on that note, I hope everyone has a great weekend. Be safe out there. Take care. And make sure to be here at 11 a.m. Eastern next Thursday as we kick off another live stream here on Facebook. Thanks again, guys. Take care. See VV Nation later on. Bye for now.